Hey everybody, Gary with Basecamp Trading. Let's take a look at the crude oil market. The floor just fell out from underneath crude today. It just a really strong move to the downside, even though the EIA report was kind of bullish for crude. You can see that over the last several days, ever since the Saudi-Russia debacle, that crude has been moving lower for the most part. This is our 240-minute chart. You can see the 50s under the 200, price under the cloud, 5 and the 13 are in a sell, 5 EMAs under the 13, again 5 and 13 in a sell, and making lower highs and lower lows. So this morning, during the overnight, crude was pushing down, and you had what actually could have potentially been a reversal doji if this doji had triggered back to the upside. As it turns out, we just consolidated a little more and set up a bear flag. This bear flag triggered in the night, and crude never looked back. So we know that we're bearish on the 240s, and here's our 30-minute chart, and we can see we're bearish on a 30-minute chart, and we love that. When we're in confluence with the dailies, the 240s, and the 30s, we know that these are the times that we can potentially get these large moves. Because when we're trading in the same direction as our higher time frames, we know that the probabilities of our setups working out are better, and we also know that these are the times that we look for these really large moves, which is exactly what we ended up doing. The bear flag had triggered off of the 240, came in this morning during the U.S. session, had, again, crude pushing down, making lower highs, lower lows, triggered this bear flag right off the bat. U.S. session starts at 7 o'clock Central Time for us, triggered this bear flag, and just got short crude. Pushed down, had a little consolidation, set up another bear flag, triggered it to the downside, continued to head lower, and set up another bear flag, triggered it to the downside, continued lower. We had hit significantly overvalued right in here off of this bar, or undervalued right here off of this bar. We know we hit significantly undervalued on our 30-minute chart, that's a time that we could get a pullback or consolidation. And as you can see, we got two nice 30-minute consolidations, set up a bear flag, triggered to the downside for another push lower, little consolidation period, set up another bear flag, triggered to the downside, push lower, touched significantly undervalued again. We consolidated, set up another doji with a bear flag, that triggered to the downside, it hit significantly undervalued. Well, at this point, we were down in a target area, and we were deeply undervalued on the 30-minute chart and hit significantly undervalued on the 240-minute chart as well. It was right at a target area. We actually had our buy sitting right there waiting to take profits in this area, and that's exactly what we ended up doing. Again, when we trade this 30-minute chart, what we're looking for is the 50 EMA to be under the 200 EMA, price to be under the cloud, the 5 and the 13 to be in a sell, the 5 EMA under the 13 EMA, and we just kept cruising lower. Again, when we trade the 30-minute chart, often what we're looking to do is trail each individual bar. And had you done that, you might have actually gotten stopped out on this one, but then it set up the bear flag, which was just a re-entry. So even if you had gotten stopped out here, you just re-entered on the bear flag and then just continued to cruise lower. Never really were worried about getting stopped out after that. Crude was super extended, right at a target area, significantly undervalued. Good time to tighten stops, take profits. But that was a nice $3,000 per contract move in crude in the U.S. session today. So again, when we're in confluence with our 240-minute chart, our daily charts, and then we start triggering bear flags on our 30-minute chart, we know that those are times where, again, our setups have a higher probability of working out, And these are the times that we look for the larger move. Again, that's not guaranteed. Sometimes we're in confluence with the higher time frame charts and we don't get these types of moves, but today they just let the floor fall right out from underneath crude, and again, good for $3,000 per contract potentially, depending on how you were trading it.